Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1627A, and today's date is July 31st, 2018, and the title of the episode is The Entire System is Imploding, and There is Only One Fix. Let's get into the economic collapse financial news. Now, a couple years ago, Greece ran into a problem, and they elected a new leader. This new leader, Tsipras, was supposed to basically go up against the central bankers. Didn't really happen, and Greece took on more debt, and the IMF was out there, the EU was out there saying that the problems of Greece have been solved. Now the IMF is warning that the Greek debt is unsustainable right now. Without more debt relief measures, Greece could struggle to maintain market access over the long run. And what they're saying is that they're projecting by 2022, which I believe is going to be much, much sooner than that, Greece is going to run into another problem. And we've seen this before. Now, we need to remember that the central bank, they don't solve the problems. They like you in debt. They like the country to be in debt. Now, they don't want the country to default. They don't want the country to sink. They like the country to be in that limbo state where they need to continually take on debt. And to take on debt, what do they have to push? They have to push austerity. They have to cut programs. They have to do whatever they possibly can so they can take on that debt. And this is what we've been seeing. And Greece, once again, is going to be running into that problem. Because when we look at the whole central bankers model, we see that it's continually working in this way, where they put countries into debt, they bail them out a little bit with more debt, they say everything's solved, and a couple of years later, the same thing happens again. It's a pattern, and they know this. Most of the other people don't know this. Countries, they can't figure this out. Leaders, they're bought and paid for, and they're continually doing the same exact thing. The only way around this is to get rid of what? The central banking system. The economy right now in the US, in the EU, in Canada, in Australia, it is completely imploding on itself. And we're looking at all these different indicators like housing, we're looking at GDP numbers, we're looking at all these different things, and we're seeing that the economy is not improving whatsoever. And I'm talking about the global economy. When we look at the debt, we can see the debt completely unsustainable. It cannot be sustained at all. If we look here in the United States, we've been following new home sales, existing home sales, and they're all declining. Pending home sales, they are declining. This is the summer months. This is the hottest time now, and everything is starting to fall apart. Case-Shiller is out there, and this is their 20-city composite. Remember what they've done. They've taken 20 cities. They've had hedge funds and investment companies purchase homes, drive up prices. Interest rates came very, very low. And they made it look like we had a housing boom once again by pushing the prices up. Because when prices of homes move up, people feel comfortable. Like, oh, look, on paper, look how much I made. I feel good. Let me take a home equity line of credit out. Let me go purchase some goods. This is what they try to do once again. But we're starting to see a problem. It's happening in Australia, Europe, Canada, and it is happening in the United States. We're starting to see a slowdown in home price appreciation. This is according to Case-Shiller. We reported on this a while back. We noticed that we've hit the top where we were back in 2008. Actually, we're above that, and now we're starting to see the prices of homes start to fall. And when we look at this, we can see that the prices, they're coming down. And this is not a good sign whatsoever. Because what happens when prices come down? Well, all those individuals that have been purchasing their homes at the height of the market, like in Canada, Australia, and the United States, well, their mortgages are set at that high price. When the price comes down, well, they're going to be underwater. They won't be able to get rid of their houses. Those people in 2008 that bought at the height of the market, they're still stuck. And this is just going to make it worse. And it's not going to improve as time goes on. Now, a lot of these individuals might have to short sell. We've seen it before. And the biggest areas right now that we're seeing a decline are in Seattle, Phoenix, New York, Detroit, and many other cities. It's beginning to happen right now. And we saw this happen back in 2006, 2007, leading up to 2008, the financial crisis. And what happens is if people see the prices of homes coming down, they take the houses off the market. When people see the houses coming off the market, traffic dries up. Once traffic dries up, people watch the market and they see that it's not improving. They don't sell the homes and everything starts to fall apart. And this is exactly what we're going to be seeing because we're headed in that direction. Actually, they're already reporting on this, and we reported on this yesterday, that they're not getting as many offers as they used to. It's all starting to dry up. Now, in the United States, we have a major problem, and this is a pension problem, and we talked about this before. We talked about private, we talked about government, and we're starting to see that the pension problem is a very big deal. The pension problem that we're talking about is the $5 trillion pension problem. This pension problem is the size of Japan's economy. Think about this for a second here, how big this is. So, state and local pension plans in the U.S. now have less than 3/4 of the money they need to meet their promised payouts, their lowest level since at least 2001. And this is according to the Public Plans Database figures, weighted by plan size. In dollar terms, the whole for state and local pensions is now $5 trillion. If governments don't increase taxes, convince pensioners to take less than they were promised, or divert funds from elsewhere, an increasing number of funds face insolvency. In Kentucky, for example, a major pension for state employees had around 16% of what it needed to fulfill its obligations based on 2017 fiscal year figures. Now, according to the Public Plans Database, which tracks state and local pension funds, a Chicago municipal employee fund had less than 30% of what it needed during the same fiscal year, while New Jersey's state pension is so underfunded it faces insolvency in 12 years, according to Pew Charitable Trust study. I mean, this is a huge problem, and it's not going to improve. For example, what happens when a pension hits a brick wall? Well, look no further than Central Falls, Rhode Island, a city of about 19,359, which was forced to cut monthly checks to retired police and firefighters by as much as 55% as the entire town tried to stave off bankruptcy. Now, the town did file bankruptcy back in 2011, and the financial situation is not much better, and the retired city employees still, today, are not getting their full pensions back. Now, take this and move it across the country. This is going to be a disaster. And if the stock market collapses, if the housing market collapses, and people start losing their jobs, governments have to lay off and basically trim and cut, guess what happens? The system implodes. This is where we are headed right now. There's no way around this. The only way to fix this is to get rid of the central banking system. And this is why Q is out there telling us that this is the next move. The economy, as we can see and as we know, it's being brought to the edge. It's being pushed as hard as it possibly can to collapse it, to control the narrative. We have two sides of the story here. We've mentioned this many times before. And what we're seeing right now is the beginning stages of the entire system collapsing on itself. We see it out in Europe. We're already having warnings about Greece and that problem once again. We see real estate collapsing in Canada, Australia, U.S., the prices are coming down, and this is the worst case scenario because central bankers, they don't like it when the housing prices come down because people contract when this happens. People contracted in 2008, 2009, and it took many, many years of the central bank of creating currency, money printing, and stuffing funds into banks and having them purchase stocks and telling them not to foreclose on homes, keep them off the market. We need to get this real estate pumped up once again. We need hedge funds and investment companies to purchase thousands upon thousands of homes. The only way we can do this is to give them free money. Go buy the homes, don't sell them, rent them if you can, keep them off the market, drive up the prices. This is what they have done in the past. The illusion that they've created is falling apart now. It's imploding. Patriots know this. Trump administration knows this. They know what's going on. So does the central bank. They understand that this system's going to fall apart. And now we're at the point where it's accelerating. This is why we see the mainstream media out there talking about how the economy is not doing as well as everyone thinks. And they're pointing out certain little things like the housing market, GDP numbers, which we know are completely manipulated. They have been manipulated for a very, very long time. And we're running out of time because the system is moving at a very fast pace to the downside. And it's going to really accelerate as we move throughout this year because we're in the great season for real estate. And as we move out of this season into the winter months, it's just going to get worse. And every year we've been seeing and watching it get worse and worse and worse. Same thing with pensions, same thing with everything else with the holiday season. This year is going to be a disaster. And we're going to see the economy rapidly fall apart. And I believe this is why Q, at this point in time, started to mention the Fed. And we said this a couple of weeks ago that Trump was going to come out and say something about the Fed to begin the narrative. And I believe what's coming next is going to be much larger than, oh, let the Fed just raise rates. Oh, let the Fed do what they feel is best. This was the setup. Now, here comes the rest. And we're going to see this narrative battle play out. But one thing you need to do, which I'm talking about everyone, myself and everyone included here, we all need to be prepared for when this transition comes because it is coming. And for some, it's going to be easier. For many, it's going to be very, very difficult. Those people that have no idea that this is coming, it will be very difficult for them. They won't even understand what is going on. And of course, what is happening here is the Patriots, they're going to try to make it as easy as possible. But you can't make it easy for every single person. It's just completely impossible. There's just too many people. You can't cover every single situation. But if the central banks get their way and they're able to control the narrative, they don't care what happens to everyone. They don't care if they lose or wipe out everyone's wealth. They could care less. So here we are once again. No matter which way this unfolds, which I believe it's going to unfold in the better scenario, you still need to be prepared for this because we're going to go through some tough times. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.